Thanks, Nisa, and welcome to On-Chain Reaction. I'm Flip Gradwell, the Chief Economist at Chainalysis, here to take you through what's been going on the blockchain. Well, this week, the Bitcoin price, it declined. It headed down to around $9,100 on the 11th of June, and that settled the week at around $9,500. Bitcoin inflows into exchanges have continued to decline. Last week, we saw the lowest 7-day average that we've seen in 6 months. This week, it's been even lower. There's now around 57,000 Bitcoin flowing into exchanges every day. There was a spike in inflows as the price headed down towards $9,000. So it looks like there were people who were heading to sell their Bitcoin before it went through that $9,000 barrier, which we know is a very important psychological level for people who are trading Bitcoin. And even though these Bitcoin balances have continued to build despite these low inflows, there was an increase in outflows the day after that price decline. So on the 12th of June, there was actually a spike in outflows, presumably as people who had actually bought some of that Bitcoin that had suddenly become a bit cheaper, they decided to take their Bitcoin off the exchange. However, overall, Bitcoin balances continue to rise. Tether balances have actually done much the same, continuing to build, though there was an increase in outflows the day after that price fall. It suggests that people who had sold their Bitcoin for Tether as the price went so low decided actually it's time to sit on the side with some Tether instead. When we look at the flows between the different types of exchanges, actually the net flows between them are almost zero. So while there's still Bitcoin going back and forth between, say, crypto to fiat and crypto to crypto exchanges, the flow between those two types is balancing out. That's interesting. It does suggest that traders who are responsible for most of the net flows between different types of exchanges are actually happy with where their portfolio of assets is sitting. They think potentially they're well positioned for what's to come in the market in the coming days and weeks. So overall, after testing 10K this month, the market this week, it tested the 9K level. And at both price levels, people sent their Bitcoin to exchanges to sell. To me, that suggests that Bitcoin is going to stay bouncing around between those two important psychological levels. Now, the people who are trading around the low 9K level, they seem to have taken their Bitcoin off the exchange if they bought Bitcoin at a low price, or if they sold for Tether, they've also taken some of that Tether off the exchange. So those people seem to be like, my trading is done for now, but they are being perhaps overwhelmed by people who are still sending Bitcoin into exchanges, still sending Tether into exchanges. So overall, the selling pressure that comes when you have a buildup of assets on an exchange, that remains. And then the net flows between exchanges, while they're low, and that suggests that traders are happy with their positions and they don't expect big structural changes in prices between exchanges to open up over the coming days, potentially weeks. So I think it's going to stay an unsettled time in the market. And that's it for this week on On-Chain Reaction.